If you're watching this video, you're probably looking at options or maybe just information on how to deal with an account that's either past due or maybe in collections. Navigating what to do or how to do it can be daunting, so I understand, but that's why we're here to help. So let's get right into it. Welcome to Ascend Finance's YouTube channel, where we cover debt relief and help you understand the costs, the pros, the cons, etc. to help you be more informed and get out of the debt cheaper, easier, and faster. My name is Justin, so let's get started. In this video, I'm going to go through 3 different things. The first thing is whether you should even do debt settlement or if there's a better option, what the difference between in collection accounts from something being paid in full versus something being settled for less, and then a few recommendations from a friend who actually has been in your shoes on what to do if you plan on making a large financial purchase in the near future. Also, if you end up liking this video, feel free to click the like button below, as it's always encouraging for us to see. And if you want to see additional content down the road, feel free to subscribe as we try to get new videos out each week. Now, let's get started. So one question you may be asking yourself is whether you should settle the debt yourself or maybe hire a firm to do so. So we're going to actually go through whether you should even do debt relief first off, as you may have other options to consider. And so on top of that, let's go through all 3. So we have gotten questions so many often, basically, should I do debt relief? Does it make sense? What the pros and cons are? And so we built a free should you do debt relief calculator that's actually linked in the description below. It'll help you estimate the cost of doing it, a holistic total cost, a monthly payment breakdown, how long it would estimate to take you, and the pros and cons. And it'll actually compare those to different options as well. Like, let's say debt management, like working with a nonprofit credit counsel. So you can kind of see which would be best. It's also free. It's 100% free. We don't even ask you for an email address to see your results. So feel free to take that. And if you have questions after that, you can reach out to us. You can speak with me or speak with one of us here, and we'll help you understand what it would look like for you specifically. Let's touch on now the difference between being paid in full versus settled for less. So the biggest difference between being paid in full and settling for less is actually pretty straightforward. Well, when negotiating with creditors, if it's the original creditor, they may not accept anything other than the full amount owed. However, your account may go to a collection agency, and once that's happened, then you may be able to actually settle it for less. Settling for less at a very simple level is you pay a lower amount than what you originally owed. Then the collection activity normally ends once you've reached an agreement with the agency or even the direct creditor. So the question may be asking is, should I pay my full balance or should I actually try to settle this for less? Well, that question really depends on your financial situation and what long-term financial goals you have. Are you thinking maybe buying a home or maybe a car in the next few years? Well, if so, you may want to consider paying the balance in full if it will not create a financial hardship or drain your emergency savings. One thing to note though, if you're looking to purchase a house in the next few years, I would highly recommend reaching out to a loan officer or a mortgage company to find out what their specific recommendations are regarding qualification and negative items on your credit report, just so you can be aware before jumping into anything. One other thing to note, if you choose to sell your account for less than owed, is in most circumstances, the IRS may consider forgiven or canceled debt as income. So you may have to actually pay income taxes on any amount of the debt that's forgiven. With that said, it's not applicable to everybody. Most times it comes down to tax solvency. And so we actually built a calculator as well that I'll link in the description below that'll help you estimate whether you're tax solvent or not. And that'll give you an idea of whether you actually would owe taxes on it. Basic level, it comes down to liabilities and assets, but feel free to take our calculator below and that'll help you understand whether you actually would owe taxes or not. When negotiating on settling your account, do not provide any payment to the creditor or collection agency until you have received a written agreement from them stating the payment agreement and the arrangement. So what I mean by that is if you owe $10,000 and you settled it for $5,500 and that's to be paid over 24 payments, and let's say equal payments and they're all the same payment, let's just say you have $250 a month, for 24 payments. I don't know what that equals to B, but my point is, let's say you have that settled out. You want to make sure it's A, in writing, and B, it's all signed off so that you can start making those payments after you've had that agreed amount made. Having a settled account on your credit report may not look as favorable to lenders over a collection account that reflects as paid in full. Now, let's say the collection account on my credit report is 6 years old. Should I even think about paying it? Well, this is what I'd say. The general rule of thumb on deciding whether or not to pay a collection account is to pay attention to the age of the account. Negative items on your credit report, such as late payments, charge-offs, collections, repos, and some bankruptcies fall off 7 years from the date of a first missed payment. So paying off older collection accounts may actually cause your credit score to drop. One other thing to note about paying off an old account or settling it for less is that any communication with a debt collector could result in the actual statute of limitations being reactivated. And by reaching out to try to settle or even inquire about the account, it could be grounds for the creditor to try to sue you. So if you're trying to make a large purchase in the next year or two, let's say, and you have a collection account that's near aging off your credit report, it may be your best interest just to wait for it to fall off of your credit report before moving forward with your purchase. Now let's say my records show that my first missed payment for an account in collection was 9 years ago, but my credit report shows it was 5 years ago. What do I actually do? Well, if you have a collection account on your report and you have the original information for it and you actually see errors, well, potentially under the Fair Debt Collection Practices Act, you may have a right to a fair and accurate credit report. You may dispute the inaccurate information just to make sure, though, you provide the proof of dispute. I know that's a lot of information and a lot of different avenues to take, and so I do hope this video was helpful. And like I said earlier, feel free to take our calculator that I linked in the description below. It'll ideally help you understand the cost, the duration, the pros and cons based on your situation and for all the different options to look at. If you do have questions, you can give us a call or you can even text us. You can reach us at 833-272-3631. Ideally, I'll try to pick up the phone. If not, someone else on our team here will pick it up and try to answer your questions. Also, if you have any questions, feel free to leave a comment down below, as there's probably other individuals with the same question as you, and that way we can answer more people. Either way, don't hesitate to call or text. Thanks again for watching. I'm always here if you have questions.